after making a bearish trading call at the beginning of May, we issued a trading flash on June 3rd that the market was bottoming and we'd make new highs, and we're up 200 and some points, S&P points since then. It's used up a lot of the market's internal energy. We have a proprietary way of measuring the market's internal energy, so we're not surprised to see the market kind of stall here a bit. But longer term, we are in a secular bull market that has years left to run.
Barry, are you surprised to see the S&P close at a new record today?
No, if you look at from about April 22nd to a little over a week ago, the cyclicals were getting trounced by the defensives, and so all you're having is a head fake rally in the cyclicals. Market's priced to perfection at over 18 times our 2019 and 2020 estimate, and we've been looking for a trading range of 28.86 plus or minus 125. At the high end here, I'm not very interested in the market. I do think that there will be another test of the cyclicals and a double bottom relative to defensives, so I would stick with that trade. And I do expect the Fed to be, they'll give us July 31st as a rate cut, but I think they're going to hold out a little bit. We have to beat the Fed up every time they give us a cut. So after July, you're looking at August. August could be a tough month.
Well, let's dive into some of the economic data. Speaking of the Fed today, the ISM Manufacturing Index coming in at 51.7, beating expectations of 51.3. And despite that beat, it is the index's lowest level since October of 2016. May construction spending coming in weaker than expected, falling by 0.8% compared to expectations of just a 0.1% increase. It was the first decline since November. Lindsey, I feel like we're going to get back into this issue where bad news on the economy becomes good news for investors. At least the market is going to end up taking it that way because it feels the Fed is going to come to the rescue on any data point that disappoints.
Oh, absolutely. I agree with you. And I think that's why when these data points came out this morning, the market remained at its highs for the day. So you did get some selling as we went into the day, though. And I think that as we move through to the end of the year, we are cautiously optimistic here, and I talked about this a little bit earlier, but if you look at the second half of the year, if you look at history, when you have a year where the S&P 500 is up more than 10% in the first half of the year, you have an 80% chance of seeing a rise of 7.5% in the second half of the year. And that compares to all second halves of the years where you see positive returns in the first half. You get 4.1% increase in the second half of the year 70% of the time.